Testing one. Testing 1 2 3. 1 2 3. Testing 1 2 3. Testing 1 2 3. Testing 1 2 3. Testing 1 2 3. MicdUpMoney. This is Ephraim Simmons coming to you with an episode of MicdUpMoney. Today we're going to talk about taxation and other financial matters entrepreneurs have to deal with. Um, my my role on this episode, and I have to do it solo because of the inclement weather, is to make sure that you get a thorough understanding of some things that may make your business not operate like it's supposed to. Now, the first segment we're going to talk about is your business is broke because it's unprotected. And that we're saying that you don't have a money problem, you have a discipline problem. If your business went quiet for 60 days, would it survive or would it panic? The things we want to talk about is frivolous expenses feeling productive because they comfort your ego. Strategic expenses protect future decisions. The IRS doesn't care how hard you work, and banks don't care how passionate you are. Receipts don't make expenses legitimate, intent does. Busy is not bankable. And lifestyle spending disguised as business strategy is financial cope coplay. Well, if expense doesn't make increase revenue, reduce risk, or improve capability, it's probably emotional. We'll talk about emotional spending with our first segment. A lot of people spend money, and the thing that I want to emphasize is just because you spend the money doesn't make it a tax deduction. And a lot of times, IRS looks at business intent when they decide whether this is a business deduction. Uh, the IRS guy says it has to be ordinary and necessary. And the thing about it is, you can make something necessary if you can define the intent of the expenditure. But what a lot of people do is they go out and they go just reckless spending. They go on trips, they go on shopping sprees, they do a lot of things with their business income. Uh, I was recently dealing with one tax client, and he spends about $3,000 on food. And I had another one that was spent more than that. And I'm saying, like, of all the business expenditures, why would you focus on 50% reduction? Far as you only get 50% off, if 50% off every dollar you spend on the expenditure, that doesn't make sense. There are a lot of other things you can do, like utilities, cell phone bills, um, internet, coaching, something else. But why would you spend your money on something that gives you 50 cents on the dollar? But the problem with business spending is people get the debit card and they just decide that I'm gonna put everything on this debit card and it's gonna be tax deductible, and that's not true. Because just because you go buy your morning coffee does not make that a deductible expense. And just because you put on the business card does not, through your business bank account, does not make it a deductible expense. What banks like to see is that you are bankable. What does bankable mean? Bankable is a term that I want to say banks use to evaluate the customer relationship. One of the things is your banking balance. How much do you regularly keep in the bank? I know on one business case, I was trying to get a business client to make $250,000 some credit, but they would not give this particular client credit only because he never kept anything in the bank. Imagine having $250,000 running through your account, but at the end of the month, your bank balance is about less than $1,000. That particular client was not bankable, and the banker just clearly defined it. He said, this guy is generating a lot of money, but he's not keeping any of that money in the bank. And I had this other client who kept about 20, 30, $40,000 in the bank at all times. This guy can go get millions of dollars from the bank at any time because they consider him bankable. Another part of the bankability is how many connections or revenue sources are you giving the bank? Do you just have a bank account? Do you have your credit cards with the bank? Do you have any other services with the bank? If you do, the bank would consider you a good customer and they'll be willing to do more for you. If you financing your vehicles to the bank, if you're doing other things to the bank, they love you because that's how they define bankability. But a lot of people they have a banking relationship, but they're not getting the benefits of it because they don't keep any money in the bank. And then it comes back to you have to have a business reserve. And that's how some people determine whether it's a good business. How much money do you have in reserves? Do you have 3 to 6 months of your normal expenses in the bank at all times? I'm not talking about when you go on your shopping spree. I'm talking about the basic bills like the rent, car notes if you have car notes, uh, cable, any of the normal expenses that you would have every month. Do you have 3 to 6 months in the bank at all times? A lot of times people do not have that in the bank, mainly because they just spend all the money. But you got to understand if you want to be bankable, if you want people to really give your business some money, you have to have money in the bank. And the thing about it is, your hustle doesn't matter if the end result is zero. Let me say that again. Your hustle does not matter if the end result is zero in the bank. Okay. Well, I don't put all my money in the bank. That's another mistake too, because bankability deals with the amount of money you have in the bank at all times. And therefore, the less money you have in the bank, the more credit risk you are. You can't convince a bank, regardless of how much money you have, how you hustle, if the end result is still zero. So you have to keep money in the bank and you have to have good legitimate expenses in the bank because if you are a gardening business, why do I see Macy's and other expenses in the bank? Because they're not ordinary expenses for a lawn care service. Okay, if you're a bakery and I'm seeing Macy's and other expenses in the bank, that's not normal or necessary either. So you got to also imagine what you put through the bank because there's a concept called piercing the corporate veil. If you have an LLC or corporation, if you keep putting expenditures through your business bank account that are personal. So you got to know all of this when you try to determine what you're going to do with your money. Next segment. Welcome back to MicdUpMoney. We're talking about business tax and we're talking about other entrepreneur issues because I'm doing it solo today. So, that's what I want to talk about. And we're talking about self-employment tax is the bill nobody warned you about. Self-employment tax isn't a surprise. It's a certainty people refuse to plan for. Most entrepreneurs undersave for self-employment taxes. They spend profit before the government shows up. Learning is not R&D if nothing changes. If you don't set aside tax money, you already spent money that wasn't yours. The IRS doesn't care that you reinvested it. If you don't plan for self-employment tax, expect 20 to 30% pain. Self-employment tax doesn't hurt because it's high. It hurts because people know it. In other words, if you are self-employed, imagine you're going to have to pay tax. Um, I tell people all the time when they look at your tax returns, okay, I'm not paying tax because I'm writing everything off. That's what a lot of people say. I'm writing everything off. The problem with writing everything off is you have nothing to show for what you're doing. If I look at your tax return and you have lost money, I don't care if you start off with $1 million, but the end result is that you have lost money. And depends on what those category expenses are, you can't get a piece of bubble gum with that tax return because banks are not interested in how much money you generate. Sometimes the only people who are interested in that are people who do accounts receivable loans. But banks in general are not concerned about how much money you earn. They are concerned about what you're doing with those tax, with that money. And so when I look at your expenditures, they want to see that you are actually doing things with that money that makes sense. And a lot of people do not make sense with what they're doing with their money. But the end result is if I have zero taxable income, I cannot get a good disability result if I have disability insurance and I need to make a claim. It's not going to work because you have nothing that the insurance company can pay on. Okay, if I'm not paying taxes, that means my business is not growing, and so therefore I have to put taxes in my business plan for strategic growth and bankability and future funding request. Okay. But banks don't loan on zero and they don't loan on less than zero. So if your business strategy is always to write off all of your income and pay no income tax, that you need to reconsider that because that's not going to get you anywhere. So the thing about it is you have to plan for self-employment taxes. I had a business case one time. The IRS had a hard on for one of my clients. I mean, this woman wanted to take his pension. And I looked at her and said, ma'am, you cannot take his pension. And she said, yeah, I'm going to take his pension because he was asked years ago to start doing self-employment taxes. That's a quarterly tax payment based upon your income, our projected income, so you will not have a tax liability at the end of the year. And you're supposed to make these scheduled quarterly payments. That means that you have to have bookkeeping. You have to have books to see how well you're doing so you can make sure you make the appropriate self-employment tax payment. A lot of people do not do that only because they think that I'm going to write off everything. I'm not going to owe any taxes. No one's going to be asking me for any tax money. But again, that's not a proper strategy for what you're trying to do. What you need to do is always have the tax strategy so that you can always have the income that you need to do what you need to do. Uh, One thing I do recommend to clients is we have to do a tax planning strategy at some point. So, and I tell them, I said, okay, you got to do tax strategy. You got to plan for self-employment taxes because it's not an option. The IRS doesn't care that, um, hey, this is gonna cost them a lot of money. They don't care that you didn't plan for it. The only thing they're gonna do is hit you with interest and penalties at the end of the year because you did not pay your required self-employment taxes. And then if they can find out that you did this on purpose, then they can also make a business case that they can go in and take funds like retirement funds, pension funds, because you recklessly and frivolously did not plan to pay these taxes. Again, if you don't pay taxes, what you're doing does not seem as bankable. If it's not bankable, then you probably cannot get business loans. Now you have to determine within yourself, are you doing this to make money? Are you doing this to have a future? Are you doing this because it's just something you're doing? Are you really planning on having something that's meaningful, having something that you really need to have to make people want to give you money? And another thing about it is you got to set aside this tax money because basically, if you're going to have income, um, it's better to pay as you go along than to have this big, massive hit at the end of the tax year. Who wants to go on and find out on April 15th you owe $15,000 and you have $16,000 in the bank? It's easy to pay those $2,000 or $3,000 every quarter as you go along than to pay that one big lick at the end of the year. You got to make that decision to see how you're going to properly plan for your business. I'm saying like this, self-employment tax doesn't hurt because it's high. It hurts because people know it. About to do segment 3. You're burnt out because you're paying everyone else except yourself. Most entrepreneurs don't quit because they fail. They quit because they never get paid. Retirement planning reduces current taxes. Paying yourself improves clarity, bankability, and sustainability. Hustle culture hates structure. Banks love it. If your business can't fund your future, it's not freedom, it's stress. Burnout is often underpaid labor, wearing ambition. Retirement isn't ladder money, it's tax control. If you don't pay yourself on purpose, you will resent the business you prayed for. In other words, when you go into business, you got to understand that the main thing is to get paid. I once saw someone who ran a restaurant. One week I saw him in the restaurant, in the kitchen, helping his employees do what they needed to do to get the food out. Then weeks later, I saw him with a security uniform on. And I said, like, hey man, what's up? And he told me basically he had a lot of stress on him, but he was not getting paid. And so he decided it would be better for him to shut everything down and get a job. And I thought about it. It's a lot of people who do have these businesses, but they really do not get paid. Why don't they get paid? One of the reasons they don't get paid is because the business isn't properly structured. Overpaying people that's really not working, and that's a problem for you. And then other times, you're looking at the situation, and if you don't make the proper adjustments, daily adjustments, then you can have too much staff that's going to eat your profitability. If you're not watching your cash, people will steal it from you. If you're not properly marketing your business, people won't properly support it. If you're a restaurant, you need a loyalty program. Why do everybody have these loyalty? Chick-fil-A and everybody have a loyalty program, and you're an independent restaurant and you don't. The difference can be astronomical in your profitability because businesses survive because they have to maintain a certain level of income to make them work. And if you don't have a loyalty program, that's one of the things that's really messing up your business. And the other part is if you're a service business, if you don't have a referral program, that you're actually actively paying for referrals and using word of mouth effectively, then you don't have anything that's going to make constant business come your way. But the thing about it is, you got to continually look at why you're not getting paid. And then the other part of it is, if you are getting paid, you need to get paid a set figure. And you have to make your compensation based upon certain results. If your business is not making the money it's supposed to, then you don't get a bonus. I've seen a lot of times business owners, doing everything is seasonal. And business owners sometimes they take extra money away because they made extra money. And then when things slow down or it's not the season for them to make a lot of money, they're broke and they're putting money in. I just see people take money out for salary and have to put money back in to pay bills. You take it out, put it back in. Why can't you just have a steady amount that you don't have to put back in? But the problem is people treat their business as a piggy bank. And that's one of the worst things to do, to treat your business as a piggy bank. You need to make sure that your business operates on structure. Banks love structure because you are predictable. It may be boring. Predictable is structure. Banks love structure because then you are predictable. If you are predictable, you are bankable because they understand wherever you are in that particular situation, they understand that they can make that thing work for you and they will know where you are and if you're meeting your profitability goals. When you don't have predictability, you don't have structure, and they look at your bank statements, in 1 month you have generated $20,000 and you have spent $22,000. In 1 month you made $5,000 when you should have been making $10,000, $15,000. What happened between those months? They like stability. They want to know that your business is going to generate a certain amount of money, but then they also want to know that regardless of what the business makes, you're going to be on a steady salary, just like you would if you were on a job, so that they know that you won't take all the money and won't be able to pay your bills when they're due. Okay, even if you want to go on a vacation, that is a quote corporate meeting, you need to have that in your budget, and it needs to be structured, and it needs to have a budget for it. You can't go out and spend $20,000 on a birthday party. You can't spend $20,000 on a vacation. Uh, this, saying it's a business meeting, and you don't have the money in the future to pay for it. And so, therefore, if you can't fund yourself, it's stress. It's stressful to hire other people, and you can't pay yourself. And then sometimes common sense is, okay, if I can't make enough money to pay myself, why would I want to employ somebody else that has to get paid before I do? I've been in that situation, and it's not a good situation to be in. I'm trying to meet money for payroll, and then sometimes the people really are stealing money from you because they're not really working. Or sometimes you have people there because you believe that you had the capacity or the capability to use them if business increased, but business has not increased. Something or some point of execution failed, and now you're just spending money for people who are doing nothing. You know, and you refuse to send them home, and you refuse to just come back and either do the KPIs to make it work or to get rid of them until you can make it work. But you got to make that decision on what you're going to do to make sure your business can pay you. Because, I used to tell people when I worked for McDonald's, when they tried to clock me out, I stopped working. And they say, well, you haven't finished your job yet. I said, you got it messed up. I work for money. I don't work for my health. And some of y'all as entrepreneurs, you're working for your health and not for money. So you need to change that structure and get things back working. Welcome back to MicdUpMoney. And we're talking about the fourth segment of this thing, and it's hope is not a risk strategy. A business without reserves and insurance isn't bold, it's reckless. Reserves buy time, time buys leverage. Disability insurance protects the income engine. Business interruption insurance protects cash flow. Cash reserves don't slow growth, they stop panic. If you stop working and everything stops, you don't own the business, you are the business. And the thing, insurance doesn't prevent disruption, it prevents collapse. Scarcity doesn't make you sharper, it makes you desperate. And think about when we look at uh, business insurance, reserves, is these things help you to get to where you need to be. And the problem with business is everyone wants to plan for, no, everyone plans for the business to be successful. But what happens when you have a hitch and things don't go like you want to? And like, for instance, the inclement weather. Some businesses have to close. Some businesses have been closed for an entire week. Imagine you trying to run a business and you do not have the income for an entire week. That 1 week could be significant enough for you that if you don't have proper reserves, you'll have to close the doors. And so therefore, when you have reserves, you can deal with inclement weather. But most importantly, if you have proper business insurance, and something does happen, you might be insured for that loss. Depends on what type of issues that they're being insured for. But the thing about it is, when you have proper business planning, when you have proper business counselors, we have proper business mentoring, they will help you to figure out what you need to do to make this thing work. A lot of times people have this thing entirely messed up. They don't really recognize that they need to have proper insurance and other things to make their business work. They depend on um, normancy. But the problem with business is it's not normal. You have periods of boom and you have periods of bust. And then you have normal business. The thing about someone who's structured is they plan for all seasons, all the times. If you're not planning for all the times, then you have a problem. You know, um, even in my business, I have to have a necessary capital to do what I need to do to fulfill my clients' needs before I can bill them. Now, if I cannot fund my own software, if I cannot fund all the other necessary things I need, like paper and stuff like that, because I didn't plan well, then I really am not doing a good business planning. And I just want to make sure that people understand that you have to look at this and make sure that you always are able to do what you need to do. If you're running a restaurant and it takes $15,000 a month to run your restaurant, you need to have $16,000 in the bank just in case one of them weeks don't bank out. Air conditioner goes down, the freezers spoil all the food, things like that. If you're a service business, and what happens when your equipment fails? What happens when you are sick and you just really can't work and you're the only employee for the business? You got to plan for all these things. There's a thing called redundancy that you have to have backup systems to make sure that you can get paid, you know. And so a lot of people don't fully think through the process. It's like, if I can't make money this way, how else can I make money? And that's the thing that people really don't understand and they really don't do. But when you are in business, you have to do everything so that you will be able to do what you need to do when you need to do it. And you have to have proper insurance. And I told people on one of our prior episodes is that a lot of people want to have cash reserves, but if you can't have proper cash reserves, then have good insurance, because good insurance minus your deductible can be in lieu of cash. And so if I needed $21,000 in cash to operate the business, but I'm only paying $300-400 in insurance as a backup until I get to $21,000, that good insurance can help me in case I have an emergency. If the business burns down, instead of me coming up with $50,000 to make the repairs, if I have good business insurance, they can come up with the $50,000 to do the repairs. And if I have business interruption insurance, and I was showing I was making profits, then they would pay me my necessary income to continue to maintain my employees and continue to pay myself as they rebuild the business. It's all in structure. It's all in forethought. It's all in planning. And that's the thing you have to do when you are, quote, the CEO or the person responsible for the business. And a lot of times people like the title, but they don't like the responsibility. Last segment. Why banks don't respect hustle. Banks don't lend to hustle, they lend to structure. Do you set aside money for self-employment taxes? Do you have a reserve fund? Could you explain your deductions calmly? Are you protected if you can't work? Is the business protected if operations stop? Are you running a plan or reacting? Structure beats charisma every time. Clarity is currency. Options are the real wealth. Smart money isn't about spending less, it's about planning better, protecting yourself, and building something that doesn't fall apart under pressure. And the thing about uh, the hustle, a lot of people want to talk about the hustle, but they don't want to actually think through the hustle. And because you know what, I talk to people who had successful businesses. People really didn't plan for successful businesses. Sometimes it just happened, and then they put around structure to make the business remain profitable. But some people don't understand why their business took off and they don't have structure. It's like if I was somebody doing beepers and all of a sudden I have this wonderful beeper business, I'm making money hands over fists. But then when cell phones come out, my revenue starts sliding. If I didn't invest in telephones, cell phones, when they came out, when I had beepers, I would be out of business. But what if I did have the Cricket telephones when they came out? Okay, I'm just saying Cricket because they were one of the telephones that came out quickly. Okay, what if I invested and I was doing well with Cricket? But then when all these other telephone companies came out, uh, and I started losing market share, what am I going to do? And one of the things about R&D is this research and development. You constantly got to keep seeing where the business is going. You got to go to industry shows. You got to go different places so that you can understand where this business is actually going. A lot of times people don't know where it's going because they just love where they are. They don't they don't do things to make their business grow, and they don't do things to make sure their business survive. I remember listening to Brian Tracy. We talked about this dentist who went all the way over to California to learn this certain procedure that made him a multimillionaire and helped him to retire uh, early because he had all the money he needed. But he just learned this simple procedure that no one else but him can do in his particular area. And sometimes, you know, you when you look for niches, the specialized training, the foresight to see where the business is going, is the thing that's going to put you over. But banks love businesses that continue to grow, and they continue to look at the next big thing and they invest in it early because you make all your money pretty much on the ground floor. Once everybody decides that a thing is good, then it's pretty much too late to be in it. I remember way back when electronic filing came, I was one of the few people that actually knew the two people in Memphis that were doing electronic filing. And I tried to get with the one person that was doing electronic filing because he was H&R and them. But the problem was they couldn't handle the capacity. So I ended up leaving them and helped someone else with their electronic filing. Okay, things were wonderful initially with electronic filing for taxes because hardly no one else could do it. I was one of the few people who could do it and make it work. But the problem was once these people made all their money, they told everybody. And then once they told everybody about electronic filing, everyone got into it. And then we saw each year our profitability in our period of business being busy would reduce because it was so many places that people could get electronic filing that eventually they made the whole business unprofitable. Now, you do have people who make good money because they charge unreasonable prices for electronic filing. And they have people because they get earned income credit, they don't shop around. Even though the United Way and other people are trying to make that thing affordable, even the IRS this year has free file because they want to cut out some of this excessive money that people are making. But what if I just stayed in that particular segment of electronic filing? I would look back today and I'd be saying like I should have gone in and done something differently. But the thing about it is, smart money is always protecting yourself and building something that doesn't fall apart under pressure. If I'm going to be building, my foundation has to be strong. But as I go up and up and up, I have to continue to broaden my base, my foundation, so I can go taller and taller. And then my foundation has to be deeper and deeper to support the upcoming building. When you're building a business, you have to do things that's going to make your business strong and solid. You got to be able to look past the corners, look past what everybody else is doing, and see what the next big thing is and get on the ground floor of it. That's if it's legitimate business. because some things are still questionable. You got to look at it. But my name is Ephraim Simmons. I'm the business strategist for MicdUpMoney. I really enjoyed talking to you today about uh, business taxes and business structure. And one of the things I want to add as a bonus to is that when you get your taxes done, remember you cannot write off all your income, because if you write off all your income, you're not bankable and you won't be able to buy a piece of bread with your tax returns. The other thing is make sure you're filing the correct tax return. When you receive your EIN, the sheet from the IRS told you what form you are supposed to file. You cannot make changes to that filing requirement unless the IRS approves it and you file certain forms. One of the business cases I was dealing with was this LLC that was supposed to be an LLC partnership. So that means they was required to file a 1065 form, but they went to a tax preparer that put them on 1120. And so when we called the IRS, they said they have no recorded return for that particular entity. Why? Because they filed the incorrect forms with the IRS. If you filed the incorrect forms with the IRS, uh, and they 4506 you for a business loan, you would not get any credit for that. So again, when you do your taxes this year, make sure you're filing the correct form with the IRS so you can get credit for it. But you can always go to MicdUpMoney. You can schedule a business tax consultation with me, or you can schedule a consultation with Tanika or with Jasmine, and we'd be glad to help you with your business structure, and we'd be glad to help you to get your business going well. We have free tools. If you check our website, or you listen to the show, I'm always coming up with new tools. So we want you to be mic'd up. We want you to be successful. So remember, go to all the Mic'd Up Money platforms across all social medias. Look at our new content, like it, share it, and subscribe. And always give us a comment telling us, hey, I like this. Or give us suggestions. Hey, you can do this better. But again, this is Ephraim with Mic'd Up Money. And I'm glad you're listening to me today. And I'm glad to be able to give you new content, even though we have inclement weather. Thank you.